Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 3. This is Section G. This is a remembering and understanding topic. Identify the written representations that should be obtained from management or those charged with governance in an engagement. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. That's what this link is right here. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your process failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. Pro members get access to the full 10-question versions of these 5-question YouTube videos. So again, in today's video, we're only going to be going over 5 questions, but SuperfastCPA Pro members will get access to the full videos in the member forum. So if you like this, make sure you check out becoming a SuperfastCPA Pro member. With all that, let's dive straight into the questions. All right, here we are at question 1. Let's just dive straight in. Which of the following best describes when a management representation letter should be dated and who typically signs it? Let's go through the options. Option A, dated as of the balance sheet date, and it needs to be signed by the chair of the board and the controller. Option B, dated before audit fieldwork begins, signed by the audit committee. Option C, dated as of the date of the auditor's report, signed by the CEO and CFO. Or option D, dated after the auditor's report is issued, signed by any member of management with financial oversight. So again, which of these is describing when a management representation letter should be dated and who typically signs it? Now, if you've seen this before, you might already know the answer, but if not, that's okay. We're going to take a closer look at this in the explanation and take a deeper dive into management representation and just written representation in general. Let's go ahead and take a look at the answer. All right, here we are. The answer is C, dated as of the date of the auditor's report and signed by the CEO and the CFO. Okay, so let's dive into this explanation. Just letting you know, throughout this video, there's a lot of small concepts in these questions and answers. So even though, I'm only doing 5 questions, there's a lot of small concepts that you can learn from these questions. So make sure you're taking note of more than just the general idea behind a question. Make sure you're also taking note of all the other things that I explain in these questions, because again, there's a lot of little topics when it comes to this blueprint topic. Anyway, let's go ahead and take a look at the explanation. The management representation letter should be dated as of the date of the auditor's report and signed by individuals with overall responsibility for financial and operational matters. And that's typically the CEO / maybe the president and the CFO. The letter is addressed to the auditor. So again, small things. That's a point that you need to pay attention to. The letter is addressed to the auditor and serves to reduce the risk of misunderstandings regarding management's responsibilities, including their responsibility for the fair presentation of financial statements. In audits of comparative financial statements, the representation letter must address all periods presented in the auditor's report. This written representation is a required part of every audit. So again, we learned a lot of small things there. We learned that the representation letter should be dated the same date as the auditor report. We learned that it should be signed by the CEO and the CFO usually. We learned that it's supposed to be addressed to the auditor. We learned that the point of it is to reduce the risk of misunderstandings regarding management's responsibilities. And we learned that it's supposed to be for all periods represented in the auditor's report. So again, a lot of small things that we learned there. I won't point this out so much in every single question, but again, just pointing out there's lots of small things to learn in each of these questions in this video. So let's go to the next question. All right, here we are at question 2. Which of the following representations would most likely appear in a management representation letter regarding accounting estimates? Let's go through the options. Option A, management confirms that estimates were reviewed by the board of directors. Option B, management states that the assumptions used in making accounting estimates are reasonable. Option C, management agrees to revise all estimates after the audit report is issued. Or option D, management asserts that only estimates affecting cash flows need to be disclosed. So again, which one of these is a representation that the management is actually probably going to put in the management representation letter? If you have any idea, that's great. Maybe pause the video and think about it. If not, though, that's okay. We are using these questions to learn. So let's go ahead and take a look at the answer together. All right, here we are. The answer is B. Management states that the assumptions used in making accounting estimates are reasonable. So that's something that is most likely going to be in the representation letter. Let's learn more about all the things that are going to be in the management representation letter. The management representation letter includes several important assertions related to the financial statements. Management must affirm that the financial statements are fairly presented in accordance with the applicable financial reporting framework, such as US GAAP. The letter must also include a statement that the significant assumptions used in making accounting estimates are reasonable, since these estimates directly affect recognition and measurement in the financials. In addition, management must represent that the effects of all known or possible litigation and claims have been properly accounted for and disclosed. These representations support the auditor's understanding of the company's financial position and ensure management takes full responsibility for the information presented. So again, just a quick recap of what we learned there. We learned that it has to have a statement about significant assumptions, that it has to have a statement about the possible litigation and claims, and it has to have information about the assumptions that the management used for accounting estimates. So again, those are the kinds of things that are going to be in the management representation letter that is going to be communicated to the auditor. Now with that, let's go to the next question. All right, here we are at question 3. Which of the following statements regarding fraud is typically included in the management representation letter? Okay, let's go through the options. Option A, management has disclosed all known fraud that involves employees with insignificant roles. Option B, management asserts that only material fraud has been communicated to the auditor. Option C, management acknowledges that preventing fraud is the auditor's primary responsibility. Or option D, management confirms that all fraud involving management or employees with key internal control responsibilities and any other fraud that could materially affect the financial statements has been disclosed to the auditor. Now, based on these different options, as I was reading through those, you probably already have an idea of which one is correct, just because sometimes it's pretty easy to tell which answer is correct if you just slowly read through the options and kind of reason your way through and look at one or two of them that don't really seem like they're pertinent, and then the other two that seem closer, and then you can usually pick out the correct one. That happens a lot of the time in audit. At any rate, again, if you don't know the answer, that's okay. We're going to look at it right now. Okay, here we are. The answer is D. Management confirms that all fraud involving management or employees with key internal control responsibilities and any other fraud that could materially affect the financial statements has been disclosed to the auditor. Again, you probably could have guessed that that was the correct answer because it was way more detailed than the other ones, but that's not always the case. At any rate, let's read the explanation. The representation letter requires management to disclose the following. First, all fraud or suspected fraud involving management, all fraud involving employees who have significant roles in internal control, and any other fraud, regardless of amount, that could result in a material misstatement of the financial statements. These written representations, combined with other assertions in the letter, such as completeness of information, compliance with laws, subsequent events, give the auditor essential evidence about the integrity of management and the reliability of the information provided for the audit. Now, one thing I just want to make very clear there, when it says any other fraud, regardless of the amount, that could result in a material misstatement of the financial statements, what that's trying to say there is that you have to report all fraud if it involves management or if it involves employees who have significant roles in internal control, but you would only report fraud if it was material for all other employees. So immaterial fraud that didn't have anything to do with management or employees with significant roles in internal control would actually not be reported. So you only report all fraud when it comes to management and employees who have significant roles in internal control, and material fraud for other employees. You don't report immaterial fraud for just your average employee who isn't management or who doesn't have control over the internal controls. So I just want to make sure that's clear. So we learned a little bit more there. Now let's go to the next question. All right, here we are at question 4. Why does the auditor request that management include representations about uncorrected misstatements and materiality in the representation letter? Let's go through the options. Option A, to support the auditor's conclusion that any uncorrected misstatements, considering both size and nature, do not result in material misstatement. Option B, to confirm that immaterial errors affecting only non-cash accounts can be excluded from the audit report. Option C, to document that management has independently verified the auditor's risk assessments. Or option D, to allow the auditor to offset overstatements and understatements when evaluating final balances. So again, why is the auditor requesting that management has a representation about uncorrected misstatements and materiality in the representation letter? Pause the video, think about this if you want to, based on everything we've learned so far, but if you have no idea, that's okay. Again, we are using these questions to learn. So let's go ahead and take a look at the answer together right now. Okay, here we are at the answer. A, to support the auditor's conclusion that any uncorrected misstatements, considering both size and nature, do not result in material misstatements. So that's why they are requesting this representation. Let's go through the explanation. Management must include in the representation letter a statement that they believe the effects of uncorrected misstatements are immaterial to the financial statements as a whole, and a summary of those misstatements. The auditor uses this to evaluate whether it is reasonable to issue an unmodified opinion. Materiality is not just about the amount, and we talked about this in the previous video. The auditor also considers qualitative factors such as the nature of the misstatement, such as is it fraud or related party issues or legal violations, and they also consider whether it affects compliance, financial ratios, or management incentives, and whether it could mislead users even if small. Again, that's the idea behind materiality, is would this cause users of the financial statements to act differently if they knew this information? And that's usually the main idea behind materiality. That can either be financial, like money, and that would be quantitative, or qualitative. Again, is there fraud? Are there related party issues that weren't disclosed? Things like that. Some items are material by nature, regardless of size. Management's written assertion helps clarify that they've considered all these factors and still believe the uncorrected items are not significant, providing critical support for the auditor's final materiality judgment. So again, that's why the auditor is going to ask management for that representation about uncorrected misstatements and materiality in their letter. Now with that, let's go to the next question. Okay, here we are at question 5. What is the auditor's appropriate response if management refuses to provide a written representation letter at the conclusion of the audit? So let's go through the options. Option A, issue an unmodified opinion if sufficient evidence was obtained through other procedures. Option B, disclose the refusal in a footnote to the financial statements. Option C, treat the refusal as a scope limitation that would result in a modified opinion. or option D, extend audit procedures to obtain oral representations from other members of management. So what happens if management refuses to give a management representation letter? Pause the video, think about this if you want, based on everything you know, and see if you can get the correct answer, see if you can guess it. If not, that's okay. We're going to look at the answer together right now. All right, here we are at the answer. C, treat the refusal as a scope limitation that will result in a modified opinion. So let's walk through this. If management refuses to provide a written representation letter, the auditor must treat this as a scope limitation, and we've kind of mentioned that in other videos, a fundamental restriction that prevents the auditor from obtaining necessary audit evidence. Because the representation letter includes critical confirmations about the financial statements, accounting estimates, fraud, compliance, and other key matters, not receiving it always precludes the issuance of an unmodified opinion, or essentially always leads to a modified opinion of some sort. Depending on the severity and pervasiveness of the limitation, the auditor may be required to issue a qualified opinion or even a disclaimer of opinion. The auditor cannot substitute other procedures for the written representations. This requirement applies in every audit, and the absence of the letter undermines the auditor's ability to conclude that the financial statements are free of material misstatement. So again, the idea there is if management refuses to give a written representation letter, that is a scope limitation that will lead to an opinion that is modified in some way. It cannot be an unmodified opinion. So we learned a little bit more about written representation in general there and the importance of that. Now, we learned a lot in the first 5 questions, and remember, there's another 5 questions for members, but before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 3 or 4 questions trying to teach you about the uncorrected misstatements and the statement that is required from management about those uncorrected misstatements, or things like that. Again, these are the things that keep popping up in the questions, and as you go, you write these out in your own words as the pillar topics. And as you do this each day, you are building your own personal repository of the most important things you need to know for the exam in your own words based on the questions that you learned from. Now with that, let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just go through this. Again, this is kind of a summary, kind of the key points of everything we just learned. First, let's talk about the purpose and requirements of the representation letter. And by the way, overall, even though the idea behind this topic was written representation, really it's talking about the representation letter from management almost all of the time. Anyway, the management representation letter confirms management's responsibility for the financial statements and reduces the risk of misunderstanding. It must be addressed to the auditor, dated as of the auditor's report date, and signed by the senior management, and usually that is the CEO and the CFO. Now let's talk about representations about financial reporting and estimates. Management must assert that the financial statements are fairly presented and that significant assumptions used in accounting estimates are reasonable. The letter must also confirm that all known or possible litigation and claims have been properly disclosed and accounted for. Now let's talk about the completeness, fraud, compliance, and subsequent events. Management must state that all relevant information has been provided, including any known fraud, whether it's material or immaterial. And remember, when it comes to the materiality of that, you have to report all fraud, whether it's material or immaterial, when it's related to management or people who have control over the internal controls, or employees who have a lot of control over the internal controls, or only if it's material for other employees. You don't have to report immaterial fraud for employees who aren't management or who don't have a lot of control over the internal controls. So I just want to make sure that's clear. Anyway, again, they have to state the fraud, they have to state stuff about instances of non-compliance with laws, and they have to have a statement about the subsequent events requiring disclosure. These confirmations help the auditor assess the completeness and accuracy of the financial statements. Now let's talk about the uncorrected misstatements and materiality limits. These are the kinds of things that also have to be in the statement. The letter must include a statement that uncorrected misstatements are immaterial to the financial statements as a whole, along with a summary of those misstatements. Materiality is evaluated based on both quantitative and qualitative factors such as size, nature, and impact on users. And then finally, mandatory nature and impact on audit opinion. Again, this is required. The written representation letter is required in all audits and is a key piece of audit evidence. If management refuses to provide it, this constitutes a scope limitation that always results in a modified opinion, either qualified or a disclaimer, some kind of modified opinion. Now with that, again, those were the pillar topics. Those were the most important things that we were meant to learn from these first 5 questions. And that is the end of the YouTube version of the video. Remember, SuperfastCPA Pro members are going to get access to the full 10-question version of the video. So I'm going to do another 5 questions after this, so they will get access to that. And if you want to become a SuperfastCPA Pro member, the easiest way to do that is by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. Again, it's free, it is 1 hour long, and we will teach you the key ingredients to passing the CPA exam. It's something you don't want to miss. And again, that will be the best path to learning about and becoming a SuperfastCPA Pro member. So make sure you check that out. With all that, I hope this video was helpful. If you did like it, make sure to like it and leave a comment, and I will see you in the next one.